Welcome back. You're tuned in to Chartbusters. You're on CNBC-TV18. Well, the IPO market is picking up steam, and Suraj Estates, their 400 crore IPO opens for subscription, and it'll close on December 20th. We have with us Mr. Rahul Thomas, who's the director, and Mr. Rajan Thomas, who is the chairman and managing director, who joins us in the studio. Good morning, gentlemen. Thanks so much for joining in. And I don't think you all could pick a better time to come up with an IPO in the real estate business. So good on you all. But give us a couple of details. You're looking to raise close to around 400 crores.
Yes.
I believe some part of that will be utilized to bring down the debt as well. So split it up for us. Out of this money that you're raising, how do you break it up in terms of utilization?
Yeah. First of all, let me thank you, Nigel, for having us here in your studios.
Yep.
This 400 crores which we are raising will be used for the most part for retiring high-cost debt.
Okay.
Why high-cost debt? Because we have got enough land back, so we are not going to spend too much money on land. We rather save that money, save costs.
Okay.
And whatever money cost we save will be added to our PAT.
Okay.
And that will be utilized to propel the development of the properties sitting on our book.
If you could give us a sense of, the cost of debt that you have, the debt that you have, how much of it will be retired, and as a result of which, how much will your finance cost extinguish by?
The secured debt was approximately around 450, out of which 285 will be used, the proceeds of this issue will be used to prepay that debt.
Okay.
35 crores would be for land and land development rights. And the balance, of course, is the GCP portion.
So post this particular issue, your debt will come down from around 450 crores to roughly around 120 crores approximately?
165 crores.
165
Yes.
crores, all right. And the cost of debt you're going to give us?
So our weighted average earlier was about 16%. So now by this, our debt equity ratio will, post issue will be around 0.5 to 0.6.
So if I just plug in the numbers, roughly on interest cost itself, you'll be saving a large sum of money. If I take on 300 crores, 16%, approximately, I think 45-50 crores will be the interest savings itself.
Absolutely.
Okay.
So that will straight away go to a PAT.
And what exactly is the current, inventory, monetizable inventory that you're sitting on? Because the first half of this year, you've done close to around 250 crores of sales already.
Yes.
What's your plan for the next 18 months or so?
So, of course, I'll just give you an idea of what we did last year. 635 crores is what we did pre-sales last year. And this year, we have about 6.5 lakh square feet of inventory, which we plan to sell.
Okay.
And we, as like Dad said, we have 16 upcoming projects, which 7.5 lakh square feet carpet area going forward. So a good pipeline is already built for the next 4 to 5 years, which is the main raw material in real estate. Now, all we need to do is put it into construction approval cost and take it forward.
Okay.
What would be the average realization that you are seeking in this 7.5 lakh?
As you know, we have prohibited from making too many.
No, this is
but I can tell you, I'll give you a thumb rule of the rates going on in the area we operate.
Yes.
They start from 40, they range from 40,000 to 60,000.
40,000.
Okay, so we keep just 50,000, is that correct?
Yeah, you can, roughly,
All right.
on average.
And give us a few more details. As of now, you're more Mumbai-centric, right? So any diversification plans? If yes, what could it look like? Point number one. Point number two, give us a split down of your business in terms of luxury, how much is commercial, any other segments you'll want to tell us about.
Yeah, I'll take the first question. As you said, we have a pipeline for 5 years, but as we execute these sites, we also got immense opportunities coming from redevelopment of society buildings, which are more than 30 years.
Okay.
And the new DCPR 30 years and above, buildings that are older. I've been given this benefit of redevelopment with higher FSI.
Right.
So that's a great potential that we see. And as we speak, we have tied up with 3 societies as well.
So just plugging in the numbers, that you spoke about, 7.5 lakh square feet, multiply that by 50,000, you are sitting on nearly 3,700 crores worth, 3,750 crores worth potential sales. That would be the right reading, right?
I would.
Is the math correct? Let's put it that way.
We say that we have good potential.
Okay.
As you see it, we have a promising pipeline.
We did the math then, but you all were about to give us the other detail as well,
split,
right?
Yeah, so just to give you a split, value luxury is basically 1 and 2 BHK compact homes. So that's actually been our bread and butter, has been doing well pre-COVID and post-COVID. So 60% of our inventory will be the value luxury segment.
Okay.
We'll have about 30% luxury, which is because that's also a market which is doing well. And of course, commercial will be 10% of our overall portfolio. So that would be the rough split.
Breakup of the portfolio.
And you're in South and Central Mumbai. Any plans of, I see you all tapping into Bandra as well now.
Yeah.
And then beyond that, could you give us a sense of what you're looking beyond the geographies that you're currently operating?
For the most part, we are, as you rightly said, we are in South Central Mumbai, but we're looking for opportunities in Greater Mumbai, other places also. The main thing is there should be some profit in whatever venture we take.
Okay.
So wherever we see such opportunities, we're open to go.
Okay, all right. This is entirely a fresh issue. Just wanted to ask you, a lot of curiosity. There wasn't any temptation to do an OFS in this sort of a market. It's the stock market is heated. The real estate space is potentially looking up. Why no OFS?
Being the maiden issue, we want to tell the market that we don't want to take any money out, but put the money all into the business back, so that we could give them a better return.
And at future, you will not be tempted to take some money out as well, because you have the potential. And in this market, there are a lot of people who are eyeing Bombay, Mumbai, the real estate, the redevelopment and all of that. There could be some large players, wanting to just buy you guys out, just thinking.
No, that's not an...
As of now, our emphasis is on this IPO. Going forward, we'll come and share with you. We have a better plan.
Well, gentlemen, we appreciate you all coming down to the studio and giving us all the details with regard to the numbers of the business. But on listing, we'll want to know a near-term guidance as well as a mid-term guidance as well. Wishing you all the best.
Absolutely. Thanks, Nigel, and thanks, Mangalam, for having us here. It's a pleasure to be with CNBC.
All right. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on markets as well as on stock-specific action. Don't go anywhere.